Hello again and welcome to this weekend market analysis for the 19th to the 23rd of June 2017. While we keep preparing to move into the new platform, we will keep analyzing the market. Although price is only moved nowadays only from high impact news announcement, the rest of the times price is mostly very quiet and giving us a very difficult market conditions to trade. Well, in this review, we are going to be looking into a few pairs to see those ones that are very close to our entry levels and what directional buyers we are going to be concentrating for this upcoming trading week. But before then, let's look into the Forex economical calendar for those high impact news announcements, those monetary policy statements, interest rate announcements that are scheduled for this upcoming trading week. Alright, as you can see from the Forex Factory economical calendar, we really do not have much for this week, but then it seems to be a moderate news week. In fact, price might be a bit stable for our trading. Alright, we have more of speeches for Monday and Tuesday. You can see all of that. They are all speeches that will be are happening for Monday and Tuesday. The Reserve Bank of Australia governor will be speaking. We'll have monetary policy meeting for the Australian dollar. Then we are going to have basically just central banks governor speaking for Monday and Tuesday. All right. So Wednesday we are going to be having interest rate announcements for the New Zealand dollar currency. So this is one high impact news event. You want to be very careful. All New Zealand dollar crosses will see heavy movement on Wednesday, the 21st of June, and others are just a normal high impact news events that you want to be careful about. All right, so from Monday to Friday, you want to be careful trading all of these currency crosses within this news release hours. All right. Okay, having said that, let's now look into the charts and see those pairs that are very close to their high tension levels or their entry point for us to decide what course of action we are going to be taking on them. First, we are looking into the euro against the American dollar. This is the weekly time frame. We have actually analyzed this pair over and over, so there is no need to waste plenty of time here. What you are seeing is price hesitation. 4 weeks in a row, price has remained in one position. A whole 4 weeks, that's a 1 month, price has remained in one position. This range, this 4 weeks range, can better be visualized in the daily time frame. So let's move into the daily time frame to see our price action right here. Okay. All right. In the daily time frame, let me actually zoom in this chart. We are going to be defining that range level. Remember, in our last review, we talked about a possible channel formation for the euro against the American dollar and a possible bounce from that point right there. This trend line is not reliable. Okay, it's not reliable. You can see how price has really not respected that line right there, so we are going to be deleting that line. What you want to do is to try to draw that possible channel formation, which we have price obviously respecting that point, another bounce right there, and currently bouncing off that level as support. Okay, you want to also draw the upper channel leg because we also have some sort of bounces. You can see how price has been respecting that upper channel leg. Okay, one there, another one right there, and the last one right there. So we have a possible, in fact, a channel formation in the daily time frame where price has been ranging for 4 whole weeks. That's 1 month of a range. This is a very difficult price pattern. All right, this is a difficult price behavior, but then for range traders, you want to wait somewhere in here and click on your buy button, and you want to wait somewhere in here to click on your sell button. That is what range traders should be doing. this is not part of our trading strategy. So for we hector traders, we have nothing here to trade really. Okay, that's the truth. If you are taking any trade off these levels of support and resistance, well, you are just an aggressive trader. These patterns are not really reliable. They can easily hit your stop losses, but at any rate, most times they can be profitable. But since they are not reliable patterns in our trading strategies, we don't trade them often. Okay. All right, so that is what we have in the euro against the American dollar. The 1 hour time frame is quite a mix. There is nothing there to actually analyze. You can just see how price is really bad here. So there is nothing in the 1 hour time frame. Let's move into the next pair, the Australian dollar against the New Zealand dollar. This is the daily time frame. Recall that we had analyzed this pair before, and we talked about this level that was acting as support right there gave way, and price right now, in one of my posts I told you this is not an ideal level to go short because price might be pulling back up. All right, so it seems that pullback is happening and price is almost there. So we are waiting somewhere around in here for price to hit that level of resistance for us to look for short entries back down. So that is what we are waiting for in the Australian dollar against the New Zealand dollar. Prices are almost there. We still have a little bit of room for price to push to the upside. So we are waiting around that level. For now, there is nothing to trade in here. You can see that ugly range price. In fact, in the lower time frame, you should have a channel. If you connect that low and this high, you should also have a channel right there. Okay, this is range in price behavior, and there is nothing there for us to trade. If price makes that pullback, banging off that area of resistance and giving us any form of reversals, that is where we'll be looking to click on our sell button. Okay, so we are still waiting. Hopefully we are going to find that pullback. The next one is the Swiss franc against the Japanese yen. This is the weekly time frame. Price is still hesitating for 1, 2, 3, 4, 5, 6, 7 weeks in a row. Price is just around that area right there. It's a sign of low volume market, no directional bias, but price is very close to our area of resistance. If we find a challenge of that point, we'll be watching for a breakout, all right, or a bounce to the downside. So we are still waiting, and hopefully we are going to be seeing a price reaction of that level of resistance. We are still waiting, and we are waited for 7 weeks in a row. So keep waiting to see what reaction we are going to find of that area of resistance. Okay, all right. Okay, before I move on to the next pair, it is obviously price is looking to push to the upside, but then if you are looking for long entries in your intraday time frame, you want to cash out your profit on time, because this is an area of resistance and it is high risk to trade or go long against that level of resistance. Conservative traders will not search for long opportunities around that area. They will rather wait for a breakout of that area before they start searching for long entries. At best, they want to be searching for short opportunities based on the reaction of that level of resistance. Okay, all right. Next one is the Canadian dollar against the Japanese yen. This is the daily time frame. Price has retested a key level of resistance. This level here once acted as a support. You can see that bounce right here, acted as resistance right there. Once a particular level acts twice or more as support and resistance, that level becomes a key level for you to watch. Okay, all right. Right now price has retested that level. We did not really get that massive rejection of that point, but at any rate, that is a level of resistance, and price for a Monday is very likely to come back down. That is not a very good pin bar for us to trade, so we are not taking that trade. But if you are an aggressive trader and you want to take that trade, then you simply want to place your sell stop order a few pips below that candle, and your stop loss few pips above the candle itself. At any rate, your entry will be fine. This is a level of resistance, and price is already ranging around that point, so this is an optimal area to look for short entries. Okay, again, if you had to really consider all levels of support and resistance, you might want to draw some kind of inner line, all right, somewhere in there where you had this bounce right there, this one again right there. So price is currently at a point of confluence and very likely to come back down from that point. So the crux of this review here is that price is at a level of resistance, and it is best to look for short entries from that point. All right, let's look into the next pair, the euro against Japanese yen. Of course, we have analyzed this before. There is a possibility of a channel formation here. We are hopeful that price will be able to push again to the upside, and from here on, this is where you want to look for your short entries. Okay, heavy hesitation here. 1, 2, 3, 4, 5, 6 weeks in a row price has been in a sideways bias. Last week candle is giving the hint that price will push into the upside. From there on, that is where you want to be searching for your short entries. Okay, all right, let's leave it at that. The next one is the euro against the sterling pounds. This is the weekly time frame. Let me actually adjust my screen. All right, this pair is having some exhaustion at current price level. This is an area of resistance. All right, an area of resistance, and we have an effective range. This is a standard range. At this high, you want to be searching for short opportunities. This is an optimal area to look for short entries. Last week candle closed in red, not just in red, but then we are having a spinning top. This is a heavy reversal sign, although a low quality signal, because this is happening at a daily level of resistance in the weekly time frame. If we had a weekly level of resistance and we find this, that is going to carry more better quality, even though our spinning tops are low quality signals. But once you have found this kind of price behavior at an area of resistance, you don't want to go long. All right, the euro against the sterling pounds is likely to begin to come back down from current price level, so you want to be searching for short entries from that point on. Okay, all right, so that is that. Don't go long on this one. The next one is the Australian dollar against the Japanese yen. Price is also at a level of resistance. This is a double level of resistance before, making it a key level of resistance as well. We were waiting to see if we can find the heavy rejection of that level, but that didn't quite happen. We do not have a pin bar, but at any rate, price is still at a level of resistance. We are still watching price behavior here to see what kind of rejection we are going to get. If price keeps pushing to the upside, then we'll be searching for continuation formations. If price bounce to the downside, we'll be looking for the kind of bounce that we are having. But it is best, all right, best to search for short opportunities from this point on. Okay, all right, let's see the next pair, the sterling pounds against the Swiss franc. This is the weekly time frame. I am also going to just adjust my screen. Okay, price is in a range, very ugly price pattern here. This range is not easily defined. It is a difficult market condition to analyze, but as you can see, we are having a sideways bias. Price has been flat, not trending to any direction. Right now, price is sitting at an area of support. This area has been acting, right? It has been holding price. Here we had some form of micro resistance right here, because a price couldn't pull through until it gave us that valid breakout. The next time price came to that area, we got a fake breakout of that point. Another retest bounce right here, so acted as support, and right now price is back again to that same point. So from here on, it is an optimal area to search for long entries. The sterling pounds against the Swiss franc, you don't want to go short at this particular level. You want to be searching for long entries from that particular zone back up. Okay. All right, anything in the daily time frame? Nothing really, nothing. There is no need to waste our time there. Let's move into the next pair. The American dollar against the Swiss franc. This is the weekly time frame. Let me just try to switch my screen. Okay, let me try to compress that a bit. Okay, price is obviously in a range. Okay, in a range. I am just focusing on the main area of this analysis, so you can see in the weekly time frame, price is in a range, and this is an area of support. Upon this daily level, this daily breakout level, we have found price hovering around one area for 5 weeks. All right, a week and sorry, a month and 1 week. Am I correct about that? Is it 5 weeks? 1, 2, 3, 4. Okay, 4 weeks, 1 month. Price has remained sideways at that point. So that range, that range in price behavior is what is really giving traders headache, because it is not pushing to the downside for a clear trend. So let's see the daily time frame where we are having that range. All right, in the daily time frame, you can see how this level has been acting as both support right there and resistance right there. So it is obvious that we might be having another range at this particular point. So what you want to see is for price to either begin to bounce off this area. All right, it seems we might have some sort of resistance at that point. That seems to be possible. Then maybe something right here, price coming back down to that point. It is quite very difficult to analyze this price pattern. If you're an hectare trader, you want to wait at this particular level. Okay, if price is able to push up and you find any reversal of that point, that will be a valid trade signal for you to go short. This will actually carry an extra degree of quality because you are trading in the direction of this original push. Okay, so the momentum is still to the downside, and that is what we are obviously waiting for. But in most cases, you might not find that pullback to that level. You might just find the price swinging up and down in a channel format. Okay, but for now, let's still wait. Hopefully we are going to see price push up to that point, then find any of those reversal patterns for us to look for our short entries. Okay. All right, let's look into the next one, the New Zealand dollar against the American dollar. This is the weekly time frame. Price is in a channel. Okay, we are seeing a channel here where price is currently at that level of resistance. That level of resistance, we got an ugly pin bar of that point. This is indeed an ugly one. Not really a high quality pin bar for us to trade, so we are not taking this trade. Only aggressive traders will. This is an optimal area again to search for short opportunities, but for us it is not a high quality signal, so we are not taking it. I am just letting you know that price is at an area of resistance, so you don't want to go short, you don't want to go long at that particular level of resistance. You want to be searching for short opportunities and only go long if price breaks above that key level of resistance, gives a pullback for another bounce. That is when you should be searching for long opportunities based on your trading strategies. Okay. All right, next one, sterling pounds against the New Zealand dollar. This is the weekly time frame. Actually, let me compress this chart so you can see that trend, that trend line, that price is bouncing off. You can see the beginning of the trend right there. This is a nice bounce off that trend. That trend line got broken, and right now it seems price is coming. Price has now retested the broken trend line from below, and this is a level of support. From there on, you should be looking for long entry. So the sterling pounds against the New Zealand dollar, you don't want to go short at that particular level. Price is actually retesting a broken trend line that has been acting as a resistance and now may act as support. Once the level of resistance has been broken, it may now act as support once retested the next time. So from here on, we will be looking for a trend collapse. Okay, so we are waiting for the first green candle to close in the weekly time frame. Once that green candle closes, we will be looking for our buy entry in this pair. Okay, so we are still watching. This is a valid trend collapse strategy or setup, so we are waiting to see if we will find that green candle for us to click on our buy button. It is a valid trend collapse setup that we are following in the weekly time frame. All right, finally, the sterling pounds against Australian dollar. This is the daily time frame. I was actually following this pair for last week, Friday. Price retested a level of former resistance. Okay, this level acted as resistance right here, got retested before that heavy breakout candle. Right now price has come all the way to retest that same level from above. All right, so we got that pin bar. You can see that candle right there. I had my buy stop order few pips above the candle. That was my buy stop order. My stop loss was few pips below. I was waiting for this candle to trigger my entry, but that didn't happen, so I have cancelled my entry. Okay, but that doesn't mean you can be searching for short opportunities. If you search for short opportunities here, you will be going short against these key levels of our support. All right, this is heavy support, so you don't want to go short until it is broken. Once price breaks below, then you are free to keep searching for short opportunities. But for now, price is still sitting above that level, so there is the tendency for price to bounce to the upside. So sterling pounds against Australian dollar, you want to be searching for only long opportunities from this level of support. Okay, all right, this is basically all. Like I said, we are just still analyzing the market in these quiet times while we are making preparations to switch to our new platform, Signal platform, where all followers or members will be having the signals of our trades delivered live to their mobile devices via the WhatsApp or Telegram app, so you can get instant signal of any trade that we take. And of course, the market will be analyzed twice daily, pre-London and the pre-US session, for us to see if we find potential trading opportunities. And of course, again, live news trades will be done by Hector himself. So it's going to be a fantastic time ahead that we'll be trading the market. So we are really working hard to implement the new platform, and hopefully that will get started very soon. Thanks for watching this video till the end. If you have questions or contributions, do not hesitate to ask them. I'll post them and we will discuss everything together. I am still your moderator, Jacob. I am wishing you a profitable trading times ahead. Cheers and enjoy your weekend. Bye bye.